stock market just did something that's extremely important. So let's dive right into it. Let's go over the facts. Let's go over what's happening and what we can take from this. The NASDAQ 100 just broke support. Now, this was a level of extreme importance, and it did not hold. What you're taking a look at right now are the futures for the NASDAQ 100. And when we take a look at them, the key level was right here at around 13,000. It was the low that was set on March 15th of 2022 before we went on that rally. Was it a bear market rally? Well, it appears so because we dropped back down to these lows and we did not form a double bottom. Instead, we broke that support and then now we are heading lower. Now, that was for the NASDAQ 100, which is very tech heavy. And some people don't like looking at the NASDAQ 100 and they rather look at the S&P 500. Well, if we switch on over to the futures of the S&P 500, we are at that double bottom right now. And if we continue lower just by a little bit, then we are going to break that low, and this is not going to be a double bottom on the S&P 500 either, and it's going to serve as a confirmation that this rally was indeed a bear market rally and we are heading lower. This can have huge impacts psychologically for the market. What does it mean to be in a bear market rally? Well, it's rallies that are witnessed in a bear market. They can be quite volatile. You can have opportunities to swing to the upside, but it's a sell the rip type of environment. You are not setting higher highs, you are setting lower lows. So the trend of the overall market continues downward, and you are in a bear market. Now, we knew we were in a bear market before this rally, but this rally was very unique. As you can see by the trend line here, we were heading lower and lower, but it was well confined. It was well identified on the we could clearly see where the lower highs were and the lower lows. It was a well-defined channel to the downside, but that all changed with the most recent rally. So there was questions if the stock market was about to reverse because we broke through this trend and we broke a couple of those prior highs, but we never got past this high here, and this sell-off following that rally has been massive, and now we set a lower low. So what does this mean as far as market dynamics? Well, the fact that we couldn't break this high, so we have a double top here, we came back this low and we broke it, so we didn't form a double bottom, is an indication that sellers are still in control. And I think that this breaking of this support here, and if it happens in the S&P 500 as well, which would give even more power to this thesis and would give even more confirmation that we are in a bear market still and we can see more downside. The confirmation that this was indeed a bear market rally is definitely not good for the overall stock market, because that means that money that is out on the sidelines is probably going to remain in the sidelines until we get some kind of confirmation that we're no longer in a bear market and we get some kind of confirmation that we are reversing. So this looks like a market where the sellers are in control and we are in a sell the rip type of environment. Now, I know I'm going to get this question asked. How low will the market go? Well, I just want to say that we still need to watch the S&P 500. We need to see that this in fact does break and we don't form a double bottom. However, with that being said, heading back over to the NASDAQ 100, we already broke that support. So maybe we see ourselves in an environment, if we bounce on the S&P 500, where tech is still selling off, tech is still in a bear market, but other sectors in the overall market that are displayed in the S&P 500, they actually start to see more inflows, they are increasing in value, and therefore the S&P 500 does not break that double bottom. But if we take a look at the NASDAQ 100, how low will we go? Because I know a lot of people are invested in companies that are in the NASDAQ 100 or have some kind of similarities to how the NASDAQ 100 trades. A lot of people like tech stocks. So there are two options here that I see are key levels of support. The first option is not going to correspond to a level on the charts. It is just a pure 25% drop peak to trough. The high of the NASDAQ 100 was $16,767. A 25% drop on that would put us at $12,575 on the dot. So around 12,500 would be a support or could potentially be a support. The next level that I see are the lows that was set here on the week of March 1st, 2021, and the highs that were set here on October 24th of 2020, and in this consolidation range here that was back in November of 2020. That price would be around $12,000 for the NASDAQ 100. That would correspond to around a 28, maybe even go a little bit lower than that, 30% drop peak to trough. Those are the two levels that I'm watching that I would definitely use some other indicators that momentum is starting to fade, maybe the RSI, the MACD, and also taking a look at the candles to see if we have some bullish momentum corresponding as well at those key levels. Now, with that being said, there are some opportunities that come out of this dramatic movement to the downside. What we are seeing this week is we're seeing a lot of big companies, companies that are very important to the overall market, report their earnings. After this week or after next week, we are going to have most of the earnings out of the way. So that risk is no longer in front of us and we can move past that. That gives us an opportunity for some buyers and some traders to come in because they know we don't have to deal with earnings and we don't have to have another fiasco like we did with Netflix stock. Another opportunity is presented when we take a look at the VIX and the current levels that we're at right now, which are around $33.50. The VIX in this kind of market basically trades in the $20 to $30 range where we see some of these breakouts, but at around $35, we're almost peaked on the VIX. And that means the fear is pretty much at the high, volatility is at the high, and we can start to see a reversal and some bullish momentum coming into the market. So with that, the VIX getting at these highs and corresponding to a near a key level on the major indices is actually a good thing because that means the stars are starting to align and we could potentially reverse. Whenever I look to get into a position that is bullish or bearish, I always try to look at the VIX following these massive moves because the VIX could be a good indication in how much fear there is out there and how much volatility we really have, and if it's reasonable to see some of that subside and we see a reversal. Some other opportunities that don't really correspond to trading but are more for investors and investments is that valuations are getting much, much cheaper. And if the market wants to throw out the baby with the bathwater, then maybe you can find yourself a nice investment or companies that are undervalued and continue to dollar cost average in them. However, I will say that one of the main lessons that I've learned in 2022 is that valuation, stocks can go way below fair value. If the market is not favorable and they are stocks that are not in the right sector and the market is punishing those, it doesn't matter what the valuation is. It could be a very good deal. It could be a cheap stock, but it can continue to fall. But if you are investing for the long term, getting things at undervalue is the best thing to do. So you can just dollar cost average, or you can just wait for the market to start to reverse and then add to that position. Now, when we take a look at the NASDAQ 100 and we take a look at this bear market rally that we most recently had, followed by that sell off, you can see that the bear market rallies provide great opportunities for swings because the moves can be very volatile. We also seem to find ourselves in positions a lot of the time in bear markets where we are extremely oversold as indicated on the RSI or the MACD or whatever indicator you might be using. You can combine those with key levels of support that make sense and also bullish candles to try to confirm a reversal, get in on a swing trade to the upside. And you can also use those same practices to try to identify where the top might be and then get into a bearish trade. But looking at the NASDAQ 100 right now, and we mentioned how we might bounce at that 25% drop, or maybe it happens relatively soon if we get some indication from a couple candles. We hit 30 on the RSI, maybe we start to rebound now. Who knows? But whatever the case might be, when we rebound, there is a good chance that it's going to be extremely volatile and there could be a massive swing to the upside. And that is where the opportunity lies. You can use that reversal to get into stocks that are going to rebound, or you can play trades like the TQQQ and try to time the reversal on the NASDAQ 100 or the Qs. This is triple leverage, so when we start to see that move to the upside, there's going to be a lot of volatility and you can make a lot of money, or you could potentially lose a lot of money if the trade doesn't go your way. In this environment, you want to put yourself in positions that are very attractive from a risk to reward ratio so that if you do lose the trade, well, you'll make up with it for another trade because of that risk to reward ratio. Now, what am I doing in this market? Well, I definitely am trading the swings in this market, but there are some other things that I'm doing for my investments and some other trading strategies that I'm implementing in this market. With high implied volatility, it's really good to be a seller of options. So I am definitely selling covered calls against my long-term positions and my longer-term swing trades. Now, with high implied volatility, I don't want to be a buyer of options because I'll be paying a lot of money for call options or put options. But I don't mind doing vertical spreads, either a call debit spread or a put debit spread. I'm not a huge fan of credit spreads because volatility is so high that the risk to reward ratio on a credit spread in this environment, if it goes wrong, is just not good enough for me because one bad trade can wipe out 5 to 10 of positive trades. So it's just not the kind of environment that I like for credit spreads. But put debit spreads and call debit spreads, I think really work in this environment. You're offsetting that high implied volatility by entering into a spread because you have a short leg. You're also getting rid of theta decay and any decay from implied volatility as well. For instance, I just posted a video where we talked about the long-term position or long-term swing trade that we have on the TBT that just last week I was able to sell covered calls and make 7% in just 1 week. And now those calls are out of the money and I can actually move the strike price up and continue to sell covered calls against my leaps on TBT. If you're interested in learning more about those strategies, then definitely I recommend checking out the playlist that this channel offers. We have an options trading for beginners playlist and other playlists as well. You can also join the Patreon. A link is provided down below. It's there where you will get access to the Discord server where I'll notify you of all of the trades that I'm doing. For instance, the latest trade that we got into that has been a success is we are short the XLU because we saw that the XLU formed a double top. We thought, hey, this stock is very oversold or overbought, sorry, on the RSI, and it's likely to come down, giving the range that it had in the past. It broke out and it broke out with that range. So we thought this is a good time to get into a bearish trade on the XLU. So we entered into a put debit spread. And with that being said, right now we are up close to 60% on that position. But if this stock continues to fall and we get down to around $72, we are basically going to be at max gains and we are going to see a lot of revenue come in from that put debit spread. These are the kinds of trades that I like to identify and share with the community on the private Discord server. A link is provided down below. Key takeaways from this video is that the NASDAQ 100 just broke support and it did not form a double bottom and bounce off of that prior support. This is extremely bearish and it confirms a bear market rally on the NASDAQ 100, but these bear market rallies can provide opportunities because they are extremely volatile. So if you can identify key levels of support, identify a reversal, get into a trade, usually they can be pretty lucrative. Another key thing to watch is the S&P 500, the futures for the S&P 500, and if indeed we follow what the Nasdaq 100 did and break that prior support, or if the S&P 500 has enough juice in it to actually form a double bottom and rebound, at which we're going to look to see if the S&P 500 can break this prior high and start setting higher highs and indicating a reversal of trend. Now that wraps it up for this video. I thank you so much for your time. If you like this video, then please consider hitting that subscribe button, ringing that bell, and smashing that like button. Otherwise, I'll catch you on the next video. It's been real. It's been fun. It's been real fun. And this is We Are Investing. And together, we are invincible. See ya.